The Biden administration announcing changes to natural gas exports, essentially freezing them in the near term, saying it needs time to better understand the long-term climate impacts of shipments. Activists cheering that move, but it's raising concerns about the U.S. status as the world's largest exporter of liquefied natural gas. And joining us now is Andrew Lipow, president of Lipow Oil Associates. Andrew, it is good to have you here. And I want to actually start, Andrew, on that headline, this decision of the Biden administration to pause approval, Andrew, of LNG exports. And Biden is talking tough here. He says this pause on new LNG approvals sees the climate crisis for what it is, the existential threat of our time. So listen, big headline here, Andrew, but really kind of bottom line this for us. What does this actually mean, Andrew? What kind of impact does this actually have?
Well, thanks very much for having me. In the near term, the impact is very limited. We actually have 3 large LNG export facilities that are coming on stream in the next 12 to 18 months on the Gulf Coast, which will make the U.S. an even bigger LNG exporter. What these new rules do is delay these several projects that were underway looking for their final permits so they could go ahead with the construction, but those plants wouldn't be coming on stream until 2027 or beyond. I think in the context of world energy supply, we have Russia's invasion of the Ukraine resulted in Europe really eliminating the majority of its natural gas imports from Russia. They've been turning to the United States and other suppliers to fill in that gap. And that's where I see the biggest issue going forward.
Hey, Andy, it's Julie here. Are we going to see some of the LNG producers and exporters in the U.S., are there any kind of measures they can take to, say, offset emissions that then would satisfy the administration?
Well, I think one of the biggest things that producers look at here in the United States is this carbon capture and sequestration, meaning that as they produce the oil, especially if the natural gas is being burnt off into the atmosphere, to put that back and re-inject it into the ground, or any of their carbon dioxide emissions need to be re-injected into the ground to lower what we call their carbon intensity.
And Andrew, I want to switch gears a bit. Let's talk about oil. I'm looking at Brent here at 78. Where do you see that price headed, Andrew, in kind of just the near to intermediate term here?
Well, today we had an event in the Red Sea where a missile struck an oil tanker that was on its way from the Mediterranean to Singapore, and that caused the oil market to completely turn around. We were down $1 this morning. We're up about 70 cents this afternoon. And these geopolitical tensions in the Middle East are causing the oil market to price in a higher probability of a supply disruption. So as a result, I'm expecting that we could see $80 WTI here in the next couple of weeks. And that, of course, translates into higher gasoline and diesel prices for the consumer.
And watching the headlines on that strike, by the way, it was a Trafigura oil tanker that apparently was struck. The one that was struck was carrying Russian fuel specifically. Andy, what are you watching? How are you even, obviously it's a very unpredictable situation, but how do you sort of game out the effect on oil prices and how sustained the effect is going to be?
Well, what I would say is these missile attacks on shipping are really disrupting the supply chains. They haven't caused any oil production to be shut in. What I expect is that these tankers are now going to be avoiding the Red Sea pretty much altogether and taking longer routes around the Cape of Good Hope, which adds about 2 weeks transit time. That, of course, adds to the cost. We also see that a number of ships that are transiting through the Red Sea that are carrying Russian oil or maybe Russian-owned, now in their satellite information are saying that they have no ties to Israel in order to avoid attacks from the Houthis. Unfortunately, the Houthis may not have the most up-to-date information of who owns which tankers, and they may actually end up attacking and sending a missile to an oil tanker that's owned by the Russians or someone else, maybe even the Chinese.
Andrew, I want to get you out of here on this. You know, another big theme for investors in the energy sector is just the amount of deal making we've been seeing, Andrew. You know, it's Exxon, Chevron, everybody's making moves. One, do you see that kind of activity continuing here in 2024, Andrew? And two, any companies that you would see as possible acquisition targets?
Well, I think the consolidation in the Permian Basin is going to continue because many of these companies have felt it's just simply easier to buy a company and buy their reserves than for drill for oil in an uncertain environment, especially overseas. I mean, one name that comes to mind is Diamondback Energy. You know, they're a big producer in the Permian Basin. We could see more consolidation on the natural gas side as well. We just had Southwestern Gas, merge with another company in the Permian. We could also see these consolidations extend to even smaller producers that are operating in Colorado, Wyoming, or North Dakota.
It's a big, important theme. We're going to keep watching. Andrew, thank you so much for joining us today.
Thanks for having me.